Hey guys, just welcome. I heard a really good phrase today, and a big thing I really wanted to do is go over that phrase with you as well. I was watching somebody else's disciplines, and I really liked one in particular. This is the one I like the most. I just popped it on the screen. I can't see some of it because I have my camera midway down, just so you can see my ugly face. And then right here it said, make sure your execution matches your analysis. I've been teaching for a long time, and I do constantly look for other information, maybe to spice it up, maybe to re-enhance what I'm thinking already, and maybe for me to just expand on someone else's simple phrase. This one was somebody's third discipline of a new trading system one of my friends are looking at, and it really sunk into me because anytime I've made an error, this is the error. Also, it's an error of listening to somebody else's alerts that might be or might not be working. Sorry, I got like a hearing aid, but this is Thomas Check donated these to me, so I appreciate it. So the sounds are a lot better. But make sure your execution matches your analysis. So I'm going to go over a couple things personally. I didn't really prepare much, so I'm going to just wing it here and there. So step one that I get from this is if you didn't analyze, then don't trade it. So we all pay for different services that gives us alerts, and I swear if you didn't trade it, if you didn't analyze it, and if somebody out of the blue just gave you an alert, every time I've lost, it's because I'm not following the rules I'm about to share with you. Because it has to be your analysis. I don't care about their analysis. You're going to get maybe the last second of their analysis and lose some money, and what are you going to do? Call them and yell at them? Well, you still got to understand why they traded it. And that's what I want to know if I get an alert. Most of the time, if I get an alert, the first thing I do is I stop and just look at the stock fully. I don't even care if the stock is running $2 in front of my face. As soon as I buy it, it might start go down because if it ran up $2, there's probably coming to pull back soon. So after being FOMO-ish and getting into those trades earlier in my life of day trading, I stopped doing it. That's when it saw a bigger improvement because another good coach that we all pay for said one time, and you got to really remember all these and put these all together to be a really good consistent trader. Is he basically says you're going to have 2 or 3 chances to trade this stock. If that doesn't sink in more than anything else, that's saying it's eventually. Now, I personally just say, if you screw up, you just got the wrong timing. If you're late to a trade, 2 things: you're not prepared, or it wasn't your analysis. People think I'm personally fast. I will say I'm fast. I've seen faster. We all know Rob Booker. I thought I was fast until I watched him just look up a couple things in front of me. Mind blown. And I'm fast, but not that fast. And if we both miss the trade, 2 things: we didn't analyze it ourselves, so we're smart enough not to take it. If you're going to see anybody discipline, if you didn't analyze it, eventually that's what they're trying to teach you here, is by not teaching some of this stuff. It's saying you're going to have to develop your own stuff. But the sad thing is sometimes we're blowing a little too much money up front when we don't have the knowledge or the education to actually perform it with the size that we're going. I first originally came out very large. I was doing 1,000 to 5,000 shares a trade after I made my initial money to get over PDT. And I did an interview with one of our really good traders in our chat room. We have a chat room. You can get in with Rob Booker. But this gentleman's a very good trader, trades every day, smoking it. Every little nuance of a stock, he's grabbed every penny out of that stock. And I wasn't jealous. I saw it, but I saw it for a while before I started trading it. But then also he gave me, maybe more confidence to say, hey, nothing's wrong with that. I don't have to see the larger trade when I can see the smaller trade. And if I have the microscope, use the microscopic trades. So part of that is, if I don't analyze it, don't follow him. I don't care how good he's great. I mean, I will clap. I will give you the name. John Grizz, killer trader. Rob Booker, killer trader. Jake Hartman, saw some really nice stats. I just don't like the gloat. But Jake, you killed it and keep killing it. I actually interviewed him right after I found out his stuff. And basically he said he just follows the rules, and that's all I really do. You're going to probably see the best traders that you like are boring people that follow a system. I think I even gave one of Rob Booker's analysis to somebody when I was on vacation last week. If he said all you had to do was this method to go collect the check out of a mailbox, would you do it? And most people, well, I don't want to do hopscotch 10 times to the mailbox. That's the dumb one I came up with. And the funny thing is, I would, because if that's all it took for you to get there, you're going to be doing fine. So the biggest thing is, whatever it takes to get where you want to go, that's what it is. You just didn't know what it took to get there. So again, if you didn't analyze it, don't trade it. That's very big, because you want to make sure you analyzed it. So let me say, hey, let's say I get an alert. What do I do with it? Analyze it. Well, at least somebody else is seeing some other money going somewhere. Okay? So analyze it. Alert, analyze, and then if it still looks good, trade it. Alert, analyze, wait for a pullback, and then trade it. As long as it follows your system, or a system of a stock going up if you're trading long, or a system if a stock's going down, you trade it. But please, even if someone gives you an alert, analyze it. Two things: you're following blindly, which is not good with money. I wouldn't blindfold you, pull you up to whatever random table at Las Vegas and say, hey, we're going 10 grand on this. What? I don't care. Just pick a number from 0 to, and there's a double 0, and just go up to 35. And whatever you pick, we're just going to put 10 grand on it. That's kind of roulette, and that's retarded. So if you do get an alert, analyze it. And yes, you're going to miss the run that they just mentioned, but they were already looking at the stock before they give you the alert. Or there's other people in the room that tell you after the trade. I'm trying to tell you as early as I can, because sometimes I have to trade it instead of telling you. I still have to make money for myself and my dreams, and you have to make money for yourself and your dreams. So if you see a stock moving up, mention it. But again, take care of yourself first. We love you. I hope you love me. But again, trade it for yourself first. You're the one with the goals. You're the one with the dream. You're the one with the job that you would rather this be the job. And also, I don't want this to be my job as well. So I'm sitting there narrowing my window down to 2 arrows. I haven't left anybody. I'm just trying to perfect the highest part of the day that more traders trade. So that's the volume. And then the pattern to me is going to be more evident to a real trade. That it's going to be more predictable, because the more volume is going to, obviously more volume is going to go up, or the more volume is going to go down. I don't care. Either way, to me, it's more predictable. So if you get an alert, try to analyze it before you trade it. Okay, so let's just go over a trade if you like, but make sure your execution. So I'm going to go over one. I'm just picking a random chart up here that was on here when I opened my screen today. GTAI. Two things. It runs up right here. 1, 2, 3 stair step up. Beautiful. I don't like the volume. I see these specs. I wouldn't trade it. It goes right. There's another after hours on Friday that I was told about, and I looked it up during a lesson today. But I'm looking for the next maneuvers. So, well, the next maneuver totally. Well, if people are shorting here or shorting at VWAP, then you're going to wait for it to break VWAP. So let's just see what happens at VWAP. We still haven't taken a trade yet. So I'm looking at this area personally, this little red line, the 99-cent area, because that's usually the dollar threshold where it goes under. So I know that. Well, I've learned that because I've traded for a year and a half. So right here, I can just sit here and highlight this line and just say, okay, I'm going to take a line here, and this is going to be a confluent area right here. And you go, well, why is that the area? Well, if you look at it, that's the area where a dollar threshold is at currently, okay? This is also where it went up here. And this one here didn't go there for a second. Here's some wicks. That's my area. That's what I'm going to choose. And then it ran up to almost $1.30 pre, and now it's downtrending, so we're down. We're doing the loop downtrend, and I call it stair-stepping up, sliding down. And now it starts stair-stepping up again. But look, it went here and came right back down to this area. It went up here, but now it did not come back down to this area. So that shows an uptrend. It goes up, and it does do the exact same area. So if you're waiting up here to take this trade, only, you're not going to be a rock star, because apparently it's going from this line to that line, back down to this line, back to that line. It just proved to you twice. All right, so now we're going to come over here. We're going to slide the trade over a little bit. And now it's bouncing in the same area. And you have higher lows. And then somebody calls out a trade. Their trade happened to be at this blue line. Well, let's say they gave us the alert, and let's see why they did it. Oh my God, this is the trade right here. He told me to get in. Here's my stop loss. Let's trade it. Boom. Holy crap, where is it going? Okay. Whoa, wait, I'm losing money. Wait, I'm losing money. Well, you forgot his alert is 15 minutes after the market opened. Whoever that trader is. All right, so right here, this is 15 minutes into the market now. We have 9:45, and if it breaks that price, that is his really call out. So don't forget that. His trade is for it to go analyze right up to the same area right here. If you notice this area, that's the other area that looks very iffy in that point, and all the way back to here. So you'll go down here. Now the stock's going up, but now look at these. They're still higher, so that's a good sign. And that was his alert at his normal time frame. And yes, it goes all the way up until about 10 cents where it doesn't go to his thing. So two things. Are you holding as it's falling back down to where you got in? Well, good, you made 10 cents. So are you prepared to get out? Even though the alert was up here to get out. Well, it didn't hit. It hit the alert. It hit the alert here also, and this person's losing money because they went in too early for that person's particular strategy. And it comes back down, and if they just waited 2 minutes, it goes right back up. But most people aren't going to wait because they're already in a losing trade, and their stop loss should be down here if they got in here, because that's the nearest low. And look, it went almost all the way there right before it ran. So the trade's good, but it didn't go where it was supposed to go by 10 whole cents. Now, you made 30 cents, but since you're greedy for that last 10 cents sometimes, it's going down. Well, look at here. It's making lower highs, lower lows, lower highs, lower lows until it doesn't. But then it just keeps on going down. So if you don't have your timing and execution, that's the difference. So personally, if I went to this trade, I come up here and I go, okay, well, this is it. This is obviously my stop loss because that's the nearest low, slightly under it. So that's going to be my stop loss. And it wouldn't have got hit. This is the only stock that's going to try to break a previous high. So if you're a breakout trader, you're getting here, and then you're getting hammered on the way down. So if you're a breakout trader only, when it's a low float and a runner, awesome. And that should happen pretty closer to the open instead of that delayed open. But it did not break it and go any higher. So that's why that entry was chosen down here at these previous areas. Right here, right before the open. So, all right, here, and here's your entry at these previous opening highs. It tried, came right back down, tried again, but actually went that time. So that's just other people selling their stuff that they maybe held too long. Okay. Now, right here, this is pretty confluent to take a little run here. 120 to 140. That looks pretty simple, but it should be your own analysis. So again, if I was taking the trade, I would have taken the 109 that kept running right here, just like they did, being a little more patient because you have to let the market shake out. The first 5-minute candle would have been somewhere up in here, and maybe that would have been the better trade for the 119 to 140 run. So I would have drawn my fibs here, down to here, because that's the low, and then this would have been a target one. So I'm actually going to go do that right now for you, because that would have been my personal analysis on this, not the chop before the run, because you would have had this and down. And if you'd have held, you'd have been fine. But I don't think people hold a lot. If you put 1,000 shares and you see it go down, 5 cents or 10 cents from your entry after it went up and kind of made you excited because it went up to $1.25. You could have already had $1,500, but now you're at negative 500 or negative 50 or 100, whatever your size is. You're not going to hold it too long, and that's when other people buy it. So right here is still uptrending though. All right, so I would do the fibs on the open right here, personally. And then right here, that would have been the level. So that would have been the 112 level, 19-ish area. It went up to target 1, and I'm out. So this is my trade. I take it here. And then if it breaks target 1, I break target 2. So personally, I would have gotten 2 trades out of this with confirmation. So my first confirmation, it would have had to beat this. It did target 1. Good. I'm in and out of that trade. And then when it breaks target 1, going to target 2, I'm back in the trade. But it quickly went back down, just testing where there's other shares to buy, or it wouldn't come down and buy them and go right back up. So that's how I trade target 1 trades and target 2 trades. But the whole thing is, if you really look at the whole big picture, it just kept testing this area and from the dollar break. So the dollar break right here, let me draw another line. Let me draw the line at the top. Right there. So once it broke this, see resistance, now support, broke under, had enough action to go back and go again, bounced here, it went over, bounced on support and went back up. That's a nice clean run. Bounced here. You could have entered there if you got it, because it soonly went back here, checked it one more time at the open, and then it broke this level and went up. So that's where I would have taken that trade, target 1, target 2, 2 separate trades, maybe a little bit more money. I don't like holding, because these stocks, like I said, once they hit here, yes, you think they're going to go, but sometimes they just go right back down. So you have to just start taking your profits a little quickly. But biggest thing is, it never went to the target the other person said. So when would you have gotten out of this trade? And yes, if you'd have got in the 109, yes, immediately it would have gone right back down eventually. But you could have had your money from here to here. And then you could have had your money there to there one more time and the expanded look at that. But otherwise, it's really just bouncing on support, going to resistance, bouncing on support, and going to resistance. If you need to reach out, just make sure you analyze your own, even if somebody gives you an alert. Because if you blindly go in, you blindly don't know where to get out. And it blindly, if you do too much shares without any knowledge, you don't have the education to be blowing all that capital that you and your family worked hard to get. And then hopefully preserve and expand it with trading, okay? Y'all have a good one. So make sure your execution matches your analysis. So my execution would have been here at 112. So I'll show you how I would take that trade. And then I'd probably go 3,000 on this one. 3,000 shares, 112. And all I'm shooting this for is 120. That's target 1. And that's my trade. And obviously my stop loss is going to be under the nearest low. So it had probably been the same exact as someone else said. And then I click over here. And what I do is, as I'm waiting. And now this is, 3,000 shares on this trade. So I'm waiting right here as the stock's going down. Quickly bounces with a lot of big volume right here. Right when it broke here, I'm in that trade because I'm just sitting here as it's approaching this. And then I click buy. Now, the other people would have bought the 109, no problem. But quickly, 4 minutes later, if you didn't take profit, it's right back down where you were and lower. So that's why I scalp. Scalp meaning taking a couple more trades. But trading is just not clicking a couple pennies. Those work on some super large stock. But it also could test against you. So be careful when you do that. So target 1 trade. So I would click it right when it got close to this price. Took the trade. And now I'm already out. And then I come back over here. If it bounced right under this again, I'm actually going to click the trade again, waiting here for it to break again. And 2 more steps. It did not go all the way down to the stop loss. It did not go all the way down to the support from earlier. So obviously buyers are still in control. And if it passes here, that's the same analysis I had on the first one. I'll click it. It'll take me out of a trade here. And I might actually hold that for a target too, because if it breaks back again, then it means it's worth more than this, because this is going up. And it broke this level and went straight to target 2. So my second trade might actually be a target 2 from the breakout of the first fit. Hey, y'all have a great weekend. If y'all need any help, I do one-on-one lessons, 200 an hour. Don't think that's a lot, because you're going to learn all this for that. And then some people go ongoing, and we help a lot of people that way as well. But just don't take a trade that's not your trade. It doesn't mean not take their trade, just at least analyze it a little bit. I think this trade was given out right around here. early in the morning. You had 15 minutes to analyze that trade and take the trade yourself. And then look, target 1, target 2, I'm out. If it goes to whatever price they said it was up here, good for you. Good for them. Good for everybody that's involved. And if it runs to $18, good for you. Good for them. I've taken my trade with my size, and then I'm here on the beach or somewhere. Obviously, I'm in Houston for a while. But I don't care if it doesn't break it any higher. Because to me, if it was going to break any higher, why did he not choose a lot higher price? So he knew it was just going to break a little bit, test the middle of it, and come back down anyway. So there you go. Execute your own trades. And if you get alert, at least analyze it before you get in it and make sure it makes sense to you. Because I know some of these are fast and you might be making quick decisions. And if you can't make a quick, good decision, then don't make a decision. The best decision is 0. Don't make any money or don't lose any money. Hey, y'all have a great weekend. I hope this helps everyone.